We have been around since the early 1980s. In my period at the firm, we've gone through several different changes of ownership. I think we're pretty experienced on that front, and we had a very clear view in what we wanted in this particular change of ownership. We wanted to be able to preserve the operating and the investment autonomy of the business, and essentially the boutique culture within our business, because that's something that our clients have bought into. During the period that we were part of the Kleinwort Benson Group, we operated very, very autonomously and separately from the other parts of the group. We felt it was very important to have very close alignment between the key individuals within the business in terms of the management team and staff and the success of the business going forward, and that was essential to preserve the stability of our business. We believe that we have got all of those components in the new partnership arrangement with Amundi, and key to that is the fact that management and staff own 12.5% of the business. Amundi has 87.5%. So we will continue to operate autonomously as a boutique with control over the commercial and the investment activities of our business as a whole, but with the backing of a large group such as Amundi. We have had to source a new name for our operation going forward, and we came up with the very original name of KBI Global Investors. The reason being that when we were part of the Kleinwort Benson Group, a lot of people already knew us as KBI. So I think it's a nice link to our heritage, a little bit of our past. There's continuity there, and also I think it positions us well going forward as a global investment manager, which is really what we are. We manage two very separate and distinct types of equity strategies. We manage global equity strategies, which are based around investing in companies that pay higher dividends. So it's all about dividends and income and screening companies on that basis. In some ways, it's the oldest game in the book. The first dividends, I think, were paid by the Dutch East India Company in 1603 in the form of spice. Obviously, the currency has changed a little bit since that then. But we absolutely believe that by screening companies on their dividend commitments and selecting companies that pay higher than average and maintain that over a period of time, we have a very different equity team then sitting alongside the global equity guys. We call them the natural resources equity team, and they invest using a very different process, a more fundamental bottom-up stock picking process in companies that are going to benefit from the supply-demand imbalances in natural resources. Our clients are roughly 50% traditional institutional clients, as in pension funds, corporates and public funds, and 50% sub-advisory, where our products are distributed through fund management companies, through manager of managers, and increasingly in the UK and European marketplace through private banks and wealth managers. Yeah, I'm obviously from Dublin. I went to college in Dublin. I've worked all my life in Ireland, which is somewhat unusual in that a lot of our staff have been away for various periods. I've always been based in Dublin. As you would gather from the nature of our business, we spend a huge amount of time on the road with an international client base, and if you're a successful Irish firm, you have to do that. And if you're a boutique firm like ourselves, I think the clients expect to see the CIO, the CEO and the senior management team, actually getting out there, spending time with them, understanding what it is that they want, and that's something that we focus on a lot. So there's no room for prima donnas in our business. We what you see is what you get. We work very hard. We wear out a lot of shoe leather. Yeah, I really enjoy the job. I enjoy the travel. It can be tough at times, but I've plenty of escape routes. Ireland is one of the big advantages of being in Dublin. In 2 hours you can be down the west of Ireland. I spend a lot of time down there. I do a lot of sailing, a lot of fishing, play a bit of golf, do some triathlon. Managed to get a few marathons in over the last while. So I stayed pretty active. I mean, as a small firm, we we fully appreciate that we can't conquer the globe. We've had to be quite selective about the regions where we have looked to develop our business. Obviously, Europe has been important to us. Northern Europe, Scandinavia. We spent a lot of time working with fund selectors and managers in the region. Within Asia, we have some very large institutional and sovereign wealth funds in Asia into our global equity strategies and also into our natural resources strategies. We distribute through a partner in the Taiwanese market, into the Japanese market. We've got partners distributing for us in the Australian market. I think a lot of that will be accelerated as we go forward under the Amundi ownership. We will continue to have control over our own distribution, and it'll be focused from the team here, but we can certainly leverage from a lot of those strong relationships that Amundi have in those regions, and also in marketplaces where we have no presence. For example, we haven't ever done anything in the Middle East, South America, and again, Amundi have people on the ground there, and I think we will be able to work with that very successfully. We've got the business into the ownership and governance structure that we have always wanted. We are now 87.5% owned by a pure play asset manager, which fortunately, and which is very exciting for us, they are the largest asset manager in Europe with €1 trillion in assets under management. We continue to have, the staff will have a meaningful stake in the business going forward, which I think is very important. And I think it's just going to be a very exciting time for us as we move ahead as KBI Global Investors.